Hello, welcome back to Millionaire in the Making. This is episode 8. This series is designed to show you the power of intentional budgeting and its effects both short and long term. Today, I'm budgeting for a married couple in Middlesex, New Jersey. She is a teacher and he is a police officer. Together, they earn $180,000 a year. They currently budget separately but are looking to combine their finances, and they're hoping to become homeowners soon and start a family. I'm going to break down how these two can be more organized in their savings efforts and how they can pave the way to early retirement. Let's do it. Before we dive into the spreadsheet, I want to take a closer look at what it means to budget based on when you're paid, because that is a fundamental principle when we talk about maximizing your success with the 8-part budget. And I realize I haven't so far in the series shown this, especially not visually, budgeting by paycheck. It really is the most efficient way to budget. So she is a teacher. She is paid on the 15th of every month and the last day of every month. So when we look at these closing days of October, this would have been October 31st right here, and that would have been a payday for her. To budget based on when you're paid for her means that we are going to have a budget window that kicks off with every payday. So every payday starts a new budget. So what does that look like on paper here? So for this payday on October 31st, that starts a budget window, and that budget will run all the way through November 14th, because that is the day before she gets paid again. And then this payday kicks off a new budget. I'll change colors here. So she would have a budget that runs from November 15th all the way through November 29th. Again, the day before she gets paid again. This would be an entire budget window here. So in short, budgeting based on when you're paid means that your budget windows match your pay cycles. So she would always have 2 budgets per month. These would be her 2 November budgets. So she would choose the semi-monthly version of the spreadsheet budget template, which is 2 budgets per month. But something that's super common and is the case here for the couple in our example today, they're not paid on the same days and at the same tempo. His paydays, he's paid every other Tuesday. And when we look at November 2024 specifically, he's going to be paid on November 12th and November 26th. So how does this work? If they're going to combine finances, what are their budget windows going to look like? Here's what I would do in their case. Here's what I'm going to recommend for them, that they budget based on when she is paid. So these 2 budget windows that I have here outlined in blue and then in yellow, those would be their budget windows. We're going to take her pay cycles, her pay tempo, and that will govern the household budget tempo. And here's why. If one of you has this fixed date payday situation, so for her, she's always paid on the 15th. And then when we talk about her end of the month payday, it's usually the 30th or 31st. Okay, if we're talking about February, it could be the 28th or 29th, but it's consistently the 30th or 31st. So she's just below that kind of fixed date payday situation, but the 15th for sure, locked in every time. What that means is that when we look at her budget window specifically, if she were to continue budgeting by herself, her first budget of the month is very consistent. The bills that are listed in that budget are consistent every time. And this set of bills is going to be probably identical to the set of bills that she'll cover in the beginning of December and in the beginning of January. Her first budget of every month is very consistent, and the same thing for her second budget of the month. That one is consistently the bills that are covered from the 15th through the end of the month. So that consistency, if we can give ourselves predictability when we budget, let's go for that every single time. Unfortunately, for those who are paid biweekly, which is super common, your dates that you are paid, they change throughout the year. And the bills that you cover within each pay cycle, that set of bills changes as a result of your pay date changing. So it's hard to establish predictability and give yourself, find that groove with your budgeting. So if we can, let's not go for biweekly budgeting. Let's go for the person who is paid on fixed dates every single month, because it will make the budgets more consistent throughout the year. So here's what we'll do. We'll have a budget that's set up for them from October 31st when she gets paid, and it'll end on November 14th. The income block for that budget will have her paycheck from October 31st and his paycheck from November 12th. And the bills that we'll list in the expenses block of that budget will be the bills that are due between October 31st and November 14th. So you see how her paydays are going to bookend their budgets. That's how this works when you budget based on when you're paid. You have this budget window. Your income is only the income that comes in that time frame. The bills that you pay and list in that budget are only the bills that are applicable to that time frame. So their budget from November 15th through November 29th will have her payday from November 15th and his paycheck from November 26th. The bills that we list in that budget will only be those that are due in this time frame. So hopefully that provides a better explanation and illustration of budgeting based on when you're paid and the logic that you'll want to apply when you're in a situation like theirs. You're not paid on the same days and at the same tempo. You need to choose one person's pay cycles to govern the household budgeting. So now we can confidently select the semi-monthly version of the budget template, which will mean that we're running 2 budgets a month, and that's exactly what we want to do. So we've selected the semi-monthly version, and for this particular iteration of the spreadsheet, what we need to do is we need to fill in 14 tables on the Start Here tab, which is essentially a setup tab. And what it'll do is it'll automatically prepare a full year of budgets by paycheck, okay, based on when she is paid. It'll automatically set up all those budget windows for us for the entire year, and it'll go ahead and auto-populate those budgets with all of the consistent bills and consistent automatic savings or automatic investing. Those repeat lines will be worked into the budgets for us, so it's going to save a lot of time. So let's do this setup for 2024, and we'll have their monthly money calendars include a Sunday start. Okay, the alternative would be a Monday start here, but I'll just keep it at Sunday. When we look at table 1, I mentioned there are 14 tables. Table 1 is the master category list. So these are just ways that we can describe types of spending. So as they log all of their spending throughout the year, every single transaction needs to be given some umbrella to fall under. That's what a budget category is. We can't change these top 3. We don't want to touch blue cells throughout this template. That indicates that there's a formula powering that cell. So we want to just leave it as it is. But the rest of this list, they would be able to modify. I'm going to keep it just as it is. This is how it comes by default. And in table 2, I'm also going to leave this one alone. These are important date types that you can use to help you color code the next tab, which is the year at a glance. So if you're somebody who loves to see the year in one view dated, and then you want to have specific things jump out at you, we can do this color coding across the annual calendar, and it'll color code based on these important date types. I'm going to leave that alone. We're going to proceed to table 3. This is the master bill list, essentially. Those bills that they pay every single month that have a fixed due date, we're going to put them in this table. So I've gone ahead and filled this in. I've just taken the bills and matched them up to their particular due date. Okay, this table can fit up to 99 bills, but I've attached them to their appropriate due date. We've got a category that's been assigned. These are pulled from the category list over here, table 1. I've got an estimated cost. I'm checking to indicate auto pay, and then I'm checking to indicate if that particular expense is a need. This final column is important because we're going to use these ones that are checked as a need. They're going to factor into the emergency fund goal setting. Okay, your most important savings effort is your emergency fund. We need a way to figure out how much it should be. That's where this comes into play, this last column. So all of this is here. You can see they've got student loan, car loan. We've got their utilities here. Now, when she filled in her application, she filled in figures for just her. Okay, they currently budget separately, but I'm going to prep this annual budget as if they've gone ahead and combined their finances. So this would be their joint master bill list, if you will. Got some subscriptions here, gym, car insurance. There is the rent. Okay, they're currently renting. More subscriptions, cell phones, standard stuff here. This is their master bill list. If they had any bills that they were paying on the same day every week, so for example, lawn care being due every Monday or something like that, we would put that here. That's not applicable to their budget, so we're going to proceed to table 5. In Table 5, we are providing estimates for variable spending. These are those costs that can change month to month. So food spending, transportation costs, pet costs. And as they grow their family, they'll want to add a line here for, children's items, children's supplies. That's something that you just want to have in your variable spending area, but not applicable to them just yet. This captures estimates for variable spending. Keep in mind, this is by paycheck. Remember, we chose the semi-monthly version of the template. We're budgeting based on when she is paid. Each pay cycle for her is about 2 weeks. So this needs to align with about 2 weeks of spending. As you fill in the setup tab, just keep in mind that what the template is doing behind the scenes under the hood is it's preparing your budgets by paycheck. If you keep that in mind as you fill this in, it starts to make more sense. Okay, let me think about this as though that is what the template is trying to automatically set up for me. In Table 6, we want to provide more details regarding her paydays. We're budgeting based on when she is paid. So Table 6 is all about her. Now, I know I mentioned don't touch the blue cells, but in some cases, we do need to make some tweaks in order for this template to really work for us. And she's a great example of this. Typically, in filling in Table 6 for semi-monthly, so I personally am always paid on the 1st and the 15th. This is the template that I use for our household. And what I put here in this top field is January 1st, 2024, and then below it, January 15th, 2024. And what it does is it auto-populates the 1st and the 15th of every month so that it gives me my full year of paydays. That's what the formulas are doing for these blue cells. We want to tweak hers a little bit though. So I cleared that formula and I went ahead and manually entered, the 15th of every month here on the right. That's her second paycheck of every month. But the first payday is actually not the first of the month. It's the last day of the previous month. All right. And the formula is not postured as it is by default to do that. So I went ahead and just manually put that in for this first column. Okay, so technically we would uncheck that and have our Table 6 ready to go. But also part of Table 6 is us describing what we want her income line to look like in every single budget. So I'm just going to call it teacher paycheck. In her case, she'd probably put her name here, but I don't disclose names in these budget demos. So we're going to put teacher paycheck. That is earned income. Let me break down what this amount is here. I'll be honest with you. Here in episode 8 of Millionaire in the Making, I'm doing a bit of budgeting 2.0 inside of the spreadsheet. I'm making some changes. I'm tweaking some of the capabilities so that it works exactly how I want to. This is something I haven't shown you yet in the series, but you're going to see it firsthand here. So if it seems a little advanced, I guess this is just my warning. We're going like one level deeper here in today's walkthrough. When we look at her paycheck, again, this is twice a month. We have her gross amount right here. We take out taxes, healthcare, disability, union dues, dental, and contributory insurance. That amount gives us this $2,566. Here's the thing though, her take-home pay is lower than this every time. This number, when she watches this video, is going to be a little bit weird to her. She's like, that's not my direct deposit. But here's why. Her direct deposit is lower than this because it has her 403B contribution already taken out, and it has her pension contribution already taken out. But here's the thing. I want to see that 403B investing and that pension investing for her in the budget. I want to see it explicitly in the budget so that I can track that investing. Some people really want to see the 401k, 403b, 457. They want to see that in the budget. And this is how you would tweak your entries to make that possible. Make sure that this amount is the amount that represents before those things are taken out. So that is what this amount is. This is what her income line is going to look like in every single budget. It'll have this $2,566. The questionnaire that people fill in to apply to be featured for Millionaire in the Making, it doesn't include space to put in things like credit card annual fees, vehicle registrations, right? Those annual costs, right? They're not monthly, but they are things that we would love to see automatically integrated into our budgets when they're due. So if you pay pest control quarterly, that would be a great thing to put here. Annual credit card fees, your annual Amazon Prime subscription renewal. You're going to want to put that stuff here. You have the due date here in this first column, give it a name, assign a category, list the amount, indicate if it's auto pay or not, provide a frequency, and then you can list here in the notes what account you have linked to make that payment if it is on auto pay. One thing to be careful of though is, let's say you have quarterly pest control. Make sure that you have an entry. If it's quarterly, you should have 4 entries for pest control for each of the times you're going to pay it throughout the year. So you're putting each specific payment into the table. If it's semi-annual, which means twice per year, you should have 2 entries in this table that are about 6 months apart. That's usually how those work. So just make sure each payment is making its way into the table. This frequency is really just, this is not you telling the template, hey, put it in there for me quarterly, put it in there for me twice per year. This is really just for you. This doesn't play into what the template is going to do for you automatically. So the way that you should use this table is go ahead and make an entry for every single payment. Here we have their investment accounts, and these boxes that are checked are used to indicate if they're retirement accounts. Really, when you check these boxes, what you're saying is, hey, template, when you go and start helping me with my retirement planning, here are the accounts that I want factored into that planning. The next table in the spreadsheet is savings buckets. I want to show you what came through in her application as far as her savings efforts, and then show you what changes I would make. We're going to make her list of savings efforts a little bit longer so that we're being more specific and more intentional with those savings goals. And you're going to see they've got a lot of savings just scattered, right? They budget separately right now. So there's savings in lots of different pockets everywhere. We want to bring that in and be really intentional. They have a lot of savings dollars. So let me show you what she mentioned in her application. So $52,000 in their emergency fund. Wow, heck of a start, right? This is incredible. Love that. They also have $51,000 set aside for their home down payment. So even though they budget separately, it sounds like for at least a couple of things, they have joined forces and put funds together for a dedicated goal. So that's what we see so far here. But here's where things start to split. She tutors every week and receives additional income from that. That additional income she has just been putting away towards savings, and that savings has grown to $6,000. It's not yet allocated for anything, but that's what it comes from. I'm just going to write here, tutor savings. That's where that money came from. Similarly for him, he's a police officer. His overtime, he's been taking that income and putting it off to the side, and that has grown to $17,000. So this is police overtime. They've got this general travel bucket of just under $2,500. There's this kind of catch-all sinking fund of $2,000. And she mentioned this was used to cover credit card annual fees, birthday gifts, Christmas gifts, etc. So it is very general in how it's used. It's $2,000. And finally, she's a teacher who has set up her payment to where she will not actually receive a paycheck in July and August. So what she does is she saves throughout the year. This is brilliant. I loved seeing that she worked this in. She saves every month to ensure that she'll have money to use in July and August, and her standard of living doesn't have to change. Right now, that savings is at $700. We'll just call this summer income, and it's going to be money that she can pull from in July and August to keep her financial situation more consistent. So this is everything that came through in the application. And immediately what jumped out at me was we need to take this $6,000, this $17,000, and this $2,000. Okay, so what is that? 25 grand total. We need to be more specific with what these are for. Because here's the thing, this is a lot of savings. I mean, altogether, I did this math. This is $131,236 in savings. A lot of this has to do with the fact that they're trying to save for a home down payment. But I have worked with couples who they're not even saving to put a down payment on a home, and they have hundreds of thousands of dollars just sitting in savings. It is possible to over save, and it happens more often than you would think. I don't want them to get into that territory. So here is what I did for them. My first goal was to just list out what buckets should they have based on some of the things that she's mentioning in her application. What should this list look like? Let me zoom out a little bit. So here are all of the things that she mentioned. And what I did, we'll just go line by line here. Here is the ultimate list of buckets that they're going to have. When we look at their emergency fund, I think bringing that down to $30,000 and moving $22K of this elsewhere is fine. And here's why. When we add up all of their needs, we're looking at about $6,000. So at $30K, they have 5 months of expenses saved. So if things went left and that job security wasn't there, they were in a crisis situation, this right here is 5 months of core expenses saved. That's fantastic. They're not yet homeowners. They're not yet parents. I think this is good. And we can shift $22K of this and repurpose across these buckets. Their travel bucket here, this $2536, I left that alone. Okay, we're just going to call that travel bucket. Same thing with her summer income. This is the money that she'll use to kind of get through July and August. Okay, that's at $700, and we're going to set up a pattern for her to save and meet that $7,000 goal. That's what she wants to have for July and August. So we'll get more into that in a bit. Here are new buckets that I set up. She didn't have a car maintenance fund set up, so we got that going. Holidays should be its own bucket. Maternity leave, she mentioned in her questionnaire as, hey, when we do grow our family, I'm going to need some funds set aside for when I'm not working. Let's make that a bucket. This one is also new here, this mom vacation. She mentioned she wants to take her mom on a vacation. When she described what she might do with this tutor savings, she mentioned taking her mom on a vacation. So that is what this line here is. We're going to make that a dedicated bucket. Birthdays, that was originally coming from this catch-all sinking fund. That's going to be its own bucket. Baby fund, to save for things like, nursery furniture, some of those initial supplies like diapers and wipes, all those things, clothes. Let's get a baby fund going. And then here's that home down payment. So this $131,236 has just been reallocated. We've been much more specific with what each savings effort is. And then we've taken this $131K and shifted things around. So now their home down payment is actually at $75,000. I would encourage this couple, and if you have not watched episode 7 of this series and you're still looking at, okay, to rent or to buy, I would encourage you to watch episode 7 and jump to the part where I do some math related to renting versus buying. I would encourage this couple to not only watch episode 7, but do even more research, especially because we're talking about Middlesex, New Jersey. Very high cost of living, housing market there. I mean, I didn't do extensive research, but I know they're going to have a lot of money down to purchase a home there, okay, to become homeowners there. So it behooves them to work the numbers and see if maybe we should just keep renting over the next few years, and then we can revisit the discussion. Here's feedback that I get a lot. People will see me do an exercise like this, do a walkthrough like this, and they see multiple savings buckets listed, and they think, oh my goodness, so you're saying they need to have a savings account for each of these and they have to keep track and move money around? That sounds like a lot of work. No, you don't have to have multiple savings accounts. Here's what I would recommend that they do. That they set up one high yield savings account, one joint high yield savings account. High yield savings accounts allow you to earn more for the money that you stage there. So my 90-second rundown on high yield savings accounts is these are typically offered by online banks that have lower overhead costs than your traditional brick and mortar ones. They don't have a building lease to pay. They operate fully online, so they can afford to pay you more in interest for staging your money with them. Okay, the bank that I have personally been with and what I recommend to anybody who will listen is Ally Online Bank. And what they have is they have a built-in buckets feature. You can set up, last I checked, you can set up to 10 buckets. I think it's probably more than that by now. But you set up multiple buckets inside of one high yield savings account. You can title them, you can give it a little icon. And then when you go into your app and you look at all your savings, it would literally look like this in one account. And Ally isn't the only one. I mean, there are other banks that offer, there's another one, I think it's SoFi, that has vaults, very similar concept. Each vault is for a specific goal, and you can have multiple inside of one account. So you're just setting up multiple buckets or vaults, whatever that particular bank calls it, inside of one account. And it's very easy to shift money within the one account, transfer money from checking to high yield savings and back. It's much easier than most people realize, but you don't have to have a savings account for each one of these. Absolutely not. And that would be way too difficult to manage. Let's simplify by having one high yield savings account that happens to have a built-in kind of segregation or organization feature. So I'm going to hop back to the spreadsheet now, and you're going to see in table 9 for the savings buckets, this is the list that I have there. And it happens to be exactly 10 buckets. Look at that. Okay, table 10, we have a debt snapshot. They've only got 2 lines to insert here. They've got car loan and student loans. 5.6% interest rate on the car loan and 4.4% on the student loans. It's about $40,000 of debt total. All right, so nothing here really jumps out at me. Thankfully, we don't see credit card debt here. This is certainly manageable for them. This is their debt snapshot. Tables 11 and 12 are for any automatic saving, investing, and giving that you do per paycheck. And again, when I say per paycheck, I'm talking about her paychecks. There's an emergency fund line here by default. They don't have any automatic savings turned on, but here is what I was talking about earlier. When I listed her income, the amount that I'm going to show in her income block for every budget, I tweaked the number a little bit to where it doesn't have the 403B and pension already taken out. And what I've done is I've put them here. So now we have a dedicated line that will show up in every single budget that shows her 403B investing and her pension investing. She also mentioned that she invests in an Acorns account $5 a week. So here's my logic here. A couple different ways I could have done this. Back in table 4, this is consistent weekly bills. I could have entered in an Acorns line here with a category of investing and a cost of $5. But one thing to keep in mind is that what the automatic budget builder will do is it'll put this line in the expenses block. So she would have to decide if she's okay with that. I chose to go ahead and put it in this investing section to make sure that the automatic budget builder feature puts it in the investing block of the 8-part budget. And I gave it an amount of 15. All right, so she's paid 2 times per month. And I don't know what day exactly she does the investing, but let's say, for example, that it's every Friday. So in a given budget, in one single budget, at most it would be $15. In fact, more often than not, it's only going to be 10. So I'm actually going to adjust this down to 10. And when she reaches those budgets where there are 3 Fridays, she can just on the spot in that single budget, adjust this number in the income block up to 15. But most of the time, she's going to invest twice in Acorns. It'll be $10. So a couple different ways that, again, you could kind of manipulate what we're doing here in the setup tab to make it work for you. But these top 2 lines here, these typically, again, come out of her paychecks before the direct deposit hits. But you can manipulate that income line so that they end up being explicitly listed in your budget. I do this personally in our household budget. My husband's 401k contributions are in this block, and it makes sure that it appears every single time. And it gives me more accurate investing charts on my annual dashboard. It actually incorporates 401k investing, which I do like seeing. So that's preference. I've gone ahead and shown you this here because it hasn't come up yet in the series. For automatic family investing / giving, this is where we would want to put things like automatically putting money into a child's 529 or UTMA or a custodial Roth IRA, automatically tithing, things like that. Again, these would be per paycheck based on when she is paid. We'd put that here. Not applicable for them, so this is blank. I'm going to come back to table 13. We're doing something really sneaky and cool with what I've done with table 13, but it'll only make sense. It'll make more sense once I show you table 14. With table 14, you can enter in income that comes in at a tempo other than the main paycheck. I mentioned how we're budgeting based on when she's paid. She is now governing the household budget windows. But very commonly, you'll have somebody who's paid biweekly, they use the biweekly template, but then they also happen to get some weekly side hustle income or monthly side hustle income. We need to be able to work that into the budgets throughout the year. So her husband's income is going to be in this additional income box. We want it to look like police officer paycheck here in the description. It's earned income. Let me jump over one field. He's paid biweekly, and his first payday of the year was January 9th, 2024. All right, so on the back end, what this is doing is it's generating his entire year of paydays, and it's going to put this amount with it. So this amount is gross paycheck minus taxes minus union dues. I did not include his 457 contributions and his pension contributions. Here is how I'm going to account for that so that the template does it for me automatically. There is a way in the template, if you've got just one biweekly expense, or maybe you've got multiple and they happen to all fall on the same day when they get paid, you can use the biweekly mortgage payment table to enter that in. So what I've done is I've put here his 457 and pension contributions categorized as investing. And the 457 I think is 100 and the pension is 363. So altogether 463 getting invested, putting it on auto pay. And the first time it comes out, I want to be January 9th, 2024. So this is not a biweekly mortgage payment, obviously. This is investing, but I'm going to use this table to ensure that the template works this investing habit into the annual budget for me automatically. So now every time we have a payday for him, we're also going to see this line worked into, again, this is going to put it in the expenses block, but that's okay because this is happening automatically anyways before he even gets paid. So we're okay with that. If she's not okay with that, then we can take a different approach. But again, if she wants to be able to see these pension contributions and 403B and 457 contributions, here's a way that we've kind of manipulated the spreadsheet to make it happen. Her tutoring income coming in every week, we can list that here as $75. We're going to want to be careful though, because again, in July and August, this income is not going to be there. So I actually went ahead and wrote myself a note here in red. I added this line to remind myself to go through and manipulate the July and August budgets. They're not going to have her paycheck in them. They're not going to have this additional tutoring income. That's going to be important for them to do before they really start budgeting with the template. Police overtime, I have just established a placeholder. Bi-weekly, again, it's going to match his paydays throughout the year. So the first one being January 9th, but it's a placeholder. So we have a variable income situation also going on in this budget. There's a lot that I get to show you inside of this example, which is one of the reasons I chose it. But I'm going to leave it a placeholder. And what we can do in one of the budgets is I can show you how I would work through determining, hey, if he gets an extra $500 in this budget, what would we do with it? So we can kind of run through a scenario like that. So now we have all 14 tables filled in. We've even managed to incorporate their automatic investing from their paychecks using a little bit of template magic there. We can check this box right here under table 14 to have it tell us how much extra we have. And when I say extra, or if you hear me use the term discretionary income, this is what I'm talking about. All the bills have been covered. Keep in mind, once you're finished with table 14, everything is done. You now have a full year of budgets with the bills already added. Any automatic investing has already been included. Your income blocks are already filled in. So when you look at these numbers, this truly is extra. This is discretionary income that you can put towards financial goals and fun. What we love to see is that we're in the green every time, very comfortably in the green every time. And I like to use this table to help me figure out just how aggressive they can be with saving and investing. They have multiple savings buckets. I mean, you saw 10 buckets. They already have a lot of money saved, but there are a few of those buckets that we still have a little bit of work to do. But now I know, I mean, at a minimum in a given month, we're talking, what, $4,800 extra that can go towards financial goals and fun. And then in some cases where he gets 3 paychecks, you can see right here, this 5707 in early May, that's because he got 3 paychecks in her budget window there. So that's a month where they have 7,800. And then the same thing happens here in the latter half of October. So, but at a minimum, 4,800 extra to work with. That tells me we can really do some aggressive saving, aggressive investing. Let's pop over to the savings bucket tracker. All right, first I'll start with the template has automatically put in all of the titles of the buckets. And what I did is I went in and according to how I reallocated their savings on this sheet that I showed you earlier, I put in starting balances for each bucket. All right, now there are a couple that we're still going to have a bit of work to do. The emergency fund is solid. That is 5 months of expenses saved, goal met. The home down payment, I don't know exactly what they're aiming for here, but again, I encourage them to look at the numbers, renting versus buying, to see if they even want to continue being really aggressive here and try to get this up to, 150K, 200K, so they can purchase a home. So I'm leaving that blank for now. Travel, I think getting this up to a nice even 3,000 by the end of the year is very doable. The summer income, she mentioned that she needs $7,000 in July and August so that their standard of living can stay the same through the summer. So I've got that goal entered here. Car maintenance, goal reached. I think this is a nice amount to have for things like oil changes, tire rotation, stuff like that. It's a good start. Holidays, goal reached. Maternity leave, goal reached. This actually represents 3 months of her take-home pay. So when we think about maternity leave, if we think about a 3-month maternity leave, this means that today already, if they move around their savings and they're really thorough and specific with their goals across those buckets, that 15K is there already. Taking her mom on a vacation, goal has already been reached. 500 for birthdays, fantastic. Baby fund, I do think this depends what they want that to look like. Are they going to go for, the really pricey like stroller and car seat combo? And are they really going to do something grand with the nursery? That's up to them. But I just went ahead and listed here $4,000. And I do think it could be a good idea to try to make this a goal that they reach in 9 months. In the event that, she gets pregnant tomorrow, like in 9 months, they'd be ready to go. Let's try to get this saved earlier rather than later. So baby fund needs some work. Summer income needs some work. And then we have just a little bit to do with travel. So I did the math. All right, I went off to the side and did some math to figure out what do we need to save to get to this 3,000 by year end for travel. We need to get to 7,000 by the end of June. And we need to get to, or we hope to get to 4,000. So we need to save an additional 3,000 over the course of 9 months for their baby fund. It probably helps to give a little bit more context in terms of when I'm filming this. We are assuming, right, day of filming here is actually October 30th. So when we look at these 2 November budgets, actually tomorrow is when she would kick off that first one for the month of November. So we're assuming that we're starting with this budget. So in doing that math, here is what we get. Let's go back to start here. Because they have so much discretionary income, I know that I'm going to be able to enter these numbers and it's still going to be fine. Here's the thing. For their new joint high yield savings account that they set up, it's very easy to set up auto transfers to where she's automatically saving into specific buckets at a specific tempo. She could align them with her paydays. It'll be beautiful and very low maintenance for them. When it comes to this template though, if I were to enter that automatic savings per paycheck in this table, it's going to do it for the entire year. I'm really only looking at helping them right now in the short term with November and December. So here's what we can do. Again, I mentioned episode 8 here. We're getting more advanced with the template. I'm going to go over to the November tab. We have their money calendar. This has been fully prepped with paydays highlighted. Here is when she receives her tutoring income. November 15th is a payday for her. The other payday for her would have been October 31st, but that's obviously not going to show up on a November calendar. That's why that's not highlighted. But those are the 2 paydays there. And then here are her husband's paydays. Bi-weekly, every other Tuesday, 12th and the 26th are his paydays for November. Bills are listed on the day that they're due. This has all been done automatically. If I slide over You can see here, it's automatically dated all of the budgets. Budget 1 for November runs from Halloween to November 14th. And the second budget will run from November 15th through the 29th, which is exactly what I showed you on this sheet at the beginning of the video. So those are ready to go. But for this automatic savings, here's what I can do. I don't want that automatic saving to start until November. If you scroll to the right past your budgets, what you have is effectively a repeat of your Start Here tab. But the power of this is that if I make a change here where this all shows up in November on the November tab, this will only change the November budgets and the December budgets. It changes that month's budgets and then anything after. It does not affect January through October. That is how I have set this up, because I know that we need to be able to make changes mid-year to our expenses. You know, summer camp appears and then it falls off. Ballet class appears and then it falls off. Maybe a bill gets reduced for the foreseeable future. We need to be able to make that change mid-year without affecting prior budgets. And here's how you do it. I'm going to go to the automatic saving investing area. This is all in place for every paycheck. That's great. But starting in November, here was the math that I did. For travel, and I'm going to need, these are powered by formula, so I'm going to need to clear those. For travel, beginning in November, per paycheck, she would need to save $116 in order to reach that $3,000 savings goal by year end. So notice how I just entered this. If I slide over, there it is for the second budget, and there it is for the first budget. If I go back to October, you're not going to see it there. It's not there. Okay, because I entered it on the November tab because I wanted it to start in November and carry over into December. I was thinking ahead when I built this template. I was thinking of you. I was thinking of us, okay? For the summer income one, where she needs $7,000 for July and August, she's already got $700, so she needs to save another $6,300. November, December, January, February, March, April, May, June. But this is going to do it by paycheck. So what do we need this to be? I did that math and it came to be $393.75 per check. So twice per month, if she saves this $393.75, she'll hit that $7,000 mark at the end of June. And finally, for the baby fund, she's got they need to save $3,000 more over the course of the next 9 months to have that baby fund in good shape. So again, I need to clear what's there because there will be formulas that I run into. And per paycheck, this would need to be $166.50. So again, let me slide over to the savings area. Here they all are. And there they are for the first budget in November. If I pop back to June, I shouldn't see it because I didn't make it applicable to June. I only want to start it in November and then have it carry forward. All right, so that is how that functions. So now they can kick off that savings in November. And also, when I go back to the Start Here tab, I'll have updated figures in this table. So notice how these November and December figures went down because now that they have that automatic saving worked in, these numbers are down. But there is still a lot of discretionary income to work with. So I'm happy with the Start Here tab. It has everything that I want to have on it. I've even worked in how they can reach their savings goals in time for the rest of these buckets. We don't really need to do anything else with their savings. That means that when we go over to, actually, before I go to the budgets, I want to show you their retirement tab. I think she mentioned she's 30 and he's 31. So if we go off of a birth year of 1993 and we look at the auto-filled figures, so it's currently 2024, the template has calculated a month of needs for them is about $6,300. And so annually in today's dollars, it's about $75,500 that they live off of for their core expenses. When we think about retirement, I wanted to just get a nice, even hey, if we want them to have $7,000 per month in retirement, pre-tax, okay, this is today's dollars. What I did is I put 703.83 here so that it would adjust this number here up to 7,000. Okay, so I just put a manipulator figure in here because I wanted to get to 7,000 in today's dollars. What that's actually going to be, if they were to retire at 58, that's actually going to be $15,500 about that they take out each month for retirement. And that's because of inflation. Okay, that's taking into account inflation. But they already have $124,000 invested. So this here, it's pulling over the retirement accounts from the Start Here tab. And then these balances are actually pulled from her net worth tracker. So if they manage to keep their net worth tracker up to date, here we are in October, here are their assets all listed here. It will pull those over for the current month. Okay, 123,000, actually just under 124,000 that they have already invested. And then here are their monthly contributions. All right, these are captured in the budgets already. Pension, 457 and pension. The Roth IRA contributions, I still need to add to their budget. All right, that came through in her questionnaire to be $400 a month. So I'm going to have this template go ahead and put $200 per paycheck for her, set aside for both of their Roth IRAs. And they would just need to set this automatic investment, automatic contribution up in their Roth IRAs to match her pay dates. That's very easy to do in 2024. But there now it's reflected into their budgets. Pop back to the retirement tab. So with all that taken into account in a given month, they're already investing almost $2,700 a month. This is fantastic. Okay, early 30s, they already have $124,000 invested, and they're at a pace of $2,600, and they still have a lot of discretionary income that they can direct. Okay, so again, these blue fields were automatically filled in, but I manipulated, I wanted this number up to 7,000. Okay, so that's where that 703.83 is that I entered in. So here's the story that this is telling. If they wanted to have $7,000 in today's dollars going into retirement for every single month, and that's pre-tax, 31 right now, planning to invest at 58 and have that money last until age 85, they would need about 3.9 million. They would have about 3.37 million. So that tells me that's a little bit too early. Let's go up a year and then bring this one down to 26. Let's see if they could work with that. We're getting closer. And again, this is just with the investing they're currently doing. It's not, clearly they can invest more, but if they were to keep pace with what they're doing right now, they can definitely very comfortably retire at 60 with $7,000 a month, and that would last until they're 85. Okay, would last for 25 years. So what I'm doing is I'm looking at their current investing gets them here, just about 4 million, and they need 3.8. So this would work for them retiring at 60. But again, remember how much discretionary income they have. They can definitely press on the gas. And here's what I would do in terms of the order of things. They've gotten into a groove with the 457 and 403B investing. That looks good. They're not yet maxing out their Roth IRAs, and they definitely could be. So right now, when we look at 2024, and it looks like the figure is not going to change for 2025, maxing out a Roth IRA in a year is $7,000. So that amounts to about $583 a month. So I would take these up from $200 per check for both of them up to $291.50 so that they could max out their Roth IRAs over the course of a year. So that'll do it when it comes to that. And then getting to the point where they're maxing out, the next thing to do would be to max out the 403B and 457. So they could go and look at, okay, what are the numbers for maxing that out? And we would see that these numbers here for 403B and is 457, these numbers would go up. And so the bottom line here would go down. But if we just go step by step here, the first budget for November, the income block is all set. This is all set. Variable spending is there. Let's make sure that we have a cushion in place, because with a zero-based budget, every dollar has a job, and we're going to want to have some wiggle room. Let's make this $200. Their emergency fund is full, plump, healthy. We get to skip this block every time. They don't have high interest debt, so we skip block 3. Their investing block, if they go back and increase their 403B and 457 contributions to be what it would take to max those out every year, we're going to see these numbers go up. All right, so the bottom line would end up going down, but they have the room to do that. Here we have their buckets. We've already set up their buckets to be in great shape across the board by the end of the year, or when they need them in the case of her summer income. Once they have a child, they can definitely invest $50, $100 per check into a 529 if they wanted to, and that would go here in block 6. And then date nights, family trips to the zoo, if they do end up purchasing a home and they want to do like a kitchen renovation, all that would go in block 7. That's basically household priorities or fun. And then individual fund money would go down here in block 8. So I think comfortably they could probably do $150, a couple $100 each, going to each of them to have for personal spending. Now, if they decided to minimize personal spending and keep their investing as it is when it comes to the 403B and the 457, they could definitely save $1,500 per month. And then when he's got a 3 paycheck budget window, it's going to be even more. Let's just do a little bit of math here. If they save $1,500 a month and they keep doing that for 2 years, that would add $36,000 to the already $75K that they have saved. All right, and they could look at, $500,000 home, $600,000 home, probably not going to be in New Jersey, but if they decide to buy somewhere else, that could potentially put them in that ballpark here in a couple years. But I can't stress enough. Look at the numbers, do a comparison. If you go back to episode 7, see how I break down what's in a mortgage. It basically breaks down to PITI, principal, interest, property taxes, and insurance. So the actual full mortgage payment that they'll end up making is often a good bit higher than just that base mortgage payment. Okay, so look for mortgage calculators that will factor in taxes and insurance. I'm pretty sure all of them will, but just be sure that it's doing those estimations as well for the area of the country that you're looking at purchasing a home in. And you compare that to, well, if we maybe get a bigger space, but we continue renting, what would that look like per month? And when you compare the two, also keep in mind that with home ownership, you're also tacking on another few hundred per month that you're saving for maintenance. And that's not something that you have to do when you're a renter. So with renting, you're freeing up more dollars to invest. So if they sit down and they prioritize and they say, look, we really want to retire early, the numbers are going to point to continuing to invest and renting. But it's not lost on me that home ownership is a major, major goal for a lot of couples. So they're just going to have to know the numbers and make a decision from there. When he receives overtime, so if this were an extra $1,000 in this budget, again, because their needs are met, their emergency fund is in great health, they don't have high interest debt, and let's say they do continue renting, I would say that extra overtime money could go towards a taxable brokerage. Okay, really trying to step through that order of investing and keeping in mind that that taxable brokerage really becomes something to bump up the list a little bit when you're looking at early retirement. I would say let's push funds there. If they're luxury travelers, that definitely becomes something they can do maybe more frequently if they want to. If they have expensive hobbies, it means that they're splitting more down here in block 8. It all comes down to what are their priorities, sources of joy. The main driver, though, is going to be, do we rent? Do we continue to rent? Do we buy? And are we really following that order of investing? So bringing their finances together really just means, hey, let's set up a joint checking account and all their income will flow into that. And that is really, it's just a temporary housing ground. They use that account to cover bills, but they do their investing out of that account. So when we talk about the Roth IRA contributions that'll come from joint checking, the savings goals, okay, they'll push that money to the joint high yield savings account. And that'll be the flow. I would say definitely keep the individual checking accounts for the personal spending money and hobbies. And that is what gets fueled in block 8. But combining really comes down to, let's have income hit one place and cover all of the bills and variable spending. And from there, we invest, we save. What's left, when we get down to block 8, push that equitably to individual checking accounts. But here is something to keep in mind in their situation. They're both contributing to pensions. And let's say that they see those through and they're able to tap into all of that pension plan. The part that they need to come up with, which is what this tab is all about, would not need to be a full $7,000. They may only need to come up with $5,000, and then the pension can help them cover the rest of the expenses. And you can see how at that point now they only need 2.7 million. So we're getting closer. So I think what we're going to see is that if they kept things the same and they plan to have that entire pension accessible and coming in during their retirement years, we now come down to mid-50s. And keep in mind, this particular calculator doesn't factor in investing your income increases. So that's going to drive it even more to the left in terms of their timeline. Now, can they access the pension at 56? There's going to need to be something to bridge the gap between retirement and when they're actually able to access the pension. So that's probably going to mean some pretty aggressive savings in their late 40s, early 50s so that they can bridge that gap. But that's the power of a pension. And that's how you would factor it into the calculator, is making sure that this figure is just the part that you need to come up with. And then the pension can take care of the rest. Overall, they're in great shape. I think they're definitely looking at an early retirement situation and very excited to see what they accomplish and just the joy in growing their family. And the last thing I'll say here, just for both of them, is thank you for what you do. I think these are oftentimes thankless positions, but you are seen, you are appreciated. Thank you for what you do. I know that was a lot, but that was today's budget walkthrough. I hope you found it helpful. We've got just 2 episodes of Millionaire in the Making left, so please let me know in the comments if there are specific things you're hoping to see. And if you would like to be featured in this series, you can apply at the link in the description. That's also where you'll find the link to the spreadsheet template that you saw me use in today's video. As always, thank you for watching, and I'll see you next time.